Ladies and gentlemen, market's boring. Believe it or not, the market is boring. We're 2 weeks out now from that big crash we saw, and we're just loitering around this price region. No real fundamental changes to our analysis. I'm going to recap you and bring you up to speed about everything you need to be watching, but I'm also going to give you a call to action, right? In tomorrow's video, I will be answering your questions about the market right now. Go to my YouTube channel. I'll show you how to do it. Go to the channel. Go to my community page right here. Okay, as you can see, scroll down and you'll see this. Ask me a question about the market you want to see answered in an upcoming video. Write your question in there, post it, and tomorrow I'll answer as much as I can. Right, that's what we're going to be doing tomorrow, but today we're going to be recapping the market, right? So just really bring you up to speed here in a swift format, just the key things you need to be looking at, not going in too much depth. But there are three distinctive things you need to be watching on Bitcoin macro to the downside, right? Levels that we need to hold on to in order to maintain macro structure. Obviously, there's been a lot of macro structural damage, but these are the key levels right now. So we've got the horizontal support block at 47 to 49k, which stems backwards here from 2022 on the dead cat bounce, which we actually held for support in this recent drop. We've got a support line stemming backwards here, as you can see, from October last year, which we actually formed on the wick downwards. That was the low point, and it cut right upwards there. You can see that holding for support. And then finally, we have a more macro line, I've been discussing for quite a long period of time now, stemming backwards from all the way back in 2018, 6 years of support there, and resistance being offered, and you could see it, being chopping around the price action multiple times, a very clean cut line actually. And on the daily candle close, although we wicked below it, on the daily candle close, it's not drawn correctly right here, but if I drew it correctly, you'd see very clearly that we actually held that line for support on the daily candle close. So those are our three major lines here, and I highly recommend you go on TradingView yourself, get a chart up, and draw in these three distinctive lines. If all three of these lines are lost, that's the end, right? Even if one of them's lost, really, even if the upper one is lost, that's also a very, very bad sign, because it's not just these three lines very important. They are very important macro lines, but what's important right now for Bitcoin is this structure itself, right? The descending channel formation. I've discussed it quite a few times on this YouTube channel now over the past couple of weeks. We entered this channel formation in February. And so again, although these macro lines are very important, if we lose the channel itself, we break down below the bottom of the channel, which would include breaking below one of the lines at this point in time. I mean, there's really no chance that the line's going to hold, right? The lines at that point are just novelty and for observational purposes. But it's really this channel, which is, again, the structure that we have been, bounded within for the last close to 6 months, 5 months now. That is very, very important. As you can see, this channel was comprised of an upper line, a lower line, and also a mid line. And this is why the price action over the last few days has been very important, because the mid line has been acting as very strong resistance, right? That's the problem right now. Okay, you can see the mid line there knocking the price back downwards. It's not only the midline that is there, though. Unfortunately, that midline, and this is one of the reasons it's been so difficult to break above it, is supported and reinforced as resistance by the bull market support band and by the 50 and 200-day SMAs, the moving averages. This is why over the last few videos I've been saying, again, recapping, that we need to be getting above around 65,000 on Bitcoin, which is above not only the midline, but also the bull market support band, which is, again, reinforcing the midline. We need to be getting above 65,000 before we can actually be confident about anything here. Right now, we are very much on the edge of a cliff. Right? We're on the edge of a cliff because the resistance zone is compressing us. And where is it compressing us towards? It's compressing us towards the bottom of the channel itself, and also compressing us towards the key support zones, which I identified at the start of this video. So we are very much on the edge of a cliff for Bitcoin. I mean, there's no way around it. Just by definition, that's true. Until we actually form and establish support on the midline, which is clearly acting as resistance, we are on the edge of a cliff. We have no breathing room. The only breathing room we have are the minor support levels that rest between us and the bottom of the channel itself, us and the cliff itself. So perhaps we're 3 steps away from the cliff, not really on the edge of the cliff, but we could be much further away from it. That's the key point. And if we shift into short-term analysis, we can see this hasn't changed, by the way. There's 3 separate green horizontal lines here. Those are the support zones right now. One of them has actually flipped red. Let me change the color of them. That's a resistance zone. But we have an ascending triangle formation. Could be good to see a break to the upside here. We have to wait and see. I'm not overly confident in the structure. I actually was pretty much, pretty confident that if we didn't hold 57k, we'd go downwards to the bottom of the channel. That didn't really play out. We lost 57k and we went downwards to our nearest support at 56. But what we actually did instead, and I couldn't have foreseen this because it wasn't a valid line. What we did though is we formed a descending support line and held that for support instead of going downwards fully and testing the bottom of the channel and also testing our ascending support line in yellow, which as you can see is the one right here that I've just circled. So we formed a new support line, which was unexpected. We just couldn't have known that because that was only a 2 retest support, which is an invalid line. So this drop recent downwards made it a valid line, and so that's a new thing we need to look at as well. But overall, I mean, you can just tell by the way I'm framing this short-term analysis, it's a mess. It's a mess, and it's confusing. And I'm not going to sit here and act like I know what's going to happen next in the short term. I don't. I would say it's more likely we go up. I would say, because I'm still technically macro bullish, I don't think we've broken down macro-wise. We've broken very important moving averages and things like that. But overall, if you've been around my YouTube channel for more than a few weeks, you'll know that this particular line stemming backwards from 2018 has always been my key line, right? For months now, it's been my key line. Now, we broke that line to the downside, and it led to a lot of fear. We broke down, we went massively below it, really. And when we were down here, it was very concerning that we were actually going to fully break it down. But luckily, the daily candle closed on top of it. So as long as that line is still active, nothing for me really changes macro. I'm still kind of in the same bullish boat on the macro scale. But again, I'm not going to sit here and expect anything on the medium term, short term, because the medium term, short term has been a mess. I mean, it's been 5 months, nearly 6 months of just, continuous consolidation. No one expected that, right? No one calling for left translated cycle, no one calling for 4-year cycle, no one expected 5 to 6 months of consolidation. But what I did tell you very clearly on this YouTube channel, and I repeated it over and over and over again, is that when the ETFs released, right, and when they were approved, I said, this is likely going to change the cryptocurrency market as we know it. And, it goes without saying, on the very next move and the very next consolidation range, it's changed, right? This is not expected, but the things like bull market support band, things like all these indicators that are very, very important in the past, pi cycle lines, all these things, I could bring them up and show you. They are all messy now. They're not as clean as they once were. And this happened just in the very next consolidation range after the ETFs approved. I don't think that's a coincidence, guys. I think the ETFs have genuinely done something to cryptocurrency here. They've allowed a much stronger arm of institutional money and power into this market that we did not have before. And I think it's leading to messy price action. But, with all of that said, I am still bullish in this market. I am still macro bullish until we lose this channel and that ascending support line. There's no reason for me not to be macro bullish. Again, there is some uncertainty going around. This is true. Unemployment is spiking to the upside. We've seen that 11 times in the past of unemployment spiking. Not quite spiking yet, but it's getting there. And if unemployment does spike, 8 of the 11 times we've seen that has led to a financial market recession. So we really need to hope that doesn't occur. But again, we just don't have clarity right now. I've heard things like, the weather could be affecting, and this is a real thing. Unemployment numbers, and perhaps that's why it's going upwards, and perhaps it shouldn't actually be going upwards here. I've heard many, many things, and I don't know what to believe particularly. I don't think anyone does. I think what we need to be doing on traditional markets is waiting until the next FOMC meeting and seeing if the Federal Reserve cuts basis points by 50 or by 25. If they cut by 50, it's more likely they're going to be going into a period of quantitative easing and printing. That would be quantitative easing by definition, but I think it would be more likely they start printing their way out of the problem. If they cut 25, in my opinion, it's more likely we see a controlled demolition of these markets and a recession. Now, there's various reasons why they could do one or the other. I don't explain these reasons very in-depthly in previous videos. I'll show you one if you want to catch up on what the traditional markets are looking like. You can look at, I believe it would be maybe this video here, 9 minutes long. It would be this video here 9 days ago. I went into it very, very fully, but the most recent would have been 2 days ago here. I went into it briefly. So you can do that if you're interested. But right now, I think there is just a plague of uncertainty that still swarms traditional markets. S&P 500 is looking good. That's good news. We have broken back above the critical levels in S&P. We had this 10-month long support line, which we broke to the downside. Luckily, we're back above that line now. We're also back above a resistance line. So perhaps it's leaning more bullish right now. Again, justifying my broadly macro bullish sentiment. But I'm not going to sit here and say we're out of the woods, because I don't think we are. I don't think we are on Bitcoin TA, and I don't think we are on macro either until this unemployment situation gets resolved. Bitcoin dominance doesn't look good for altcoins. It's continuing to the upside, just flipped a major support zone. The Ethereum BTC charts, again, flipping major resistance here, right? Until we get back above that yellow line and actually break this descending, broadening wedge itself, so break this white line up here, there's really no reason to be holding massive amounts of Ethereum or massive amounts of altcoins. It's just kind of dangerous for no reason. I think that altcoin and Ethereum holding here is a dangerous thing to be doing. I don't really see the benefit in it. It's very clear that the Ethereum BTC chart and the Bitcoin dominance chart is still in aggressive downwards trend for Ethereum BTC and aggressive upwards trend for Bitcoin dominance, meaning that Bitcoin is still the primary asset that you should be holding. It's outperforming all assets still. So yeah, I don't see the point in altcoin holding or Ethereum holding here, and that's why, going into the further point, I don't really, sit here and expect any kind of altcoin season at all until we break the broader structure as it stands, which is the major descending channel formation. So Bitcoin's the go-to asset right now. Ethereum and altcoins, why? We're not in a Ethereum market or altcoin market. Very simple. When we break this macro structure, it's likely that we will be. But right now, again, there is that plague of uncertainty. We need to get above 65K. We need to break this broader structure as a whole. We need to hold the broader structure as a whole. Everything kind of relies on the TA within this channel and also the movement of the Federal Reserve coming up in this FOMC meeting in about 30 days now. So again, just recapping everything you need to know. Hopefully that was a good recap. Apologies for being a little bit vague. That's all I can do right now. I'm very clearly still in the macro bullish camp, but I'm not going to sit here and act like everything's all good, because it's not, right? It's not. There have been some significant unexpected things that have happened in the last few months, and I need to cover that and make sure you're aware of it. But guys, again, the community page, you have to go write a comment in here so I can answer it in the next video. If you have a comment to write, if you have a question, put it in there. Don't put it in this comment section below. Put it in that one right there, and I'll answer all those questions tomorrow. Go ahead and check out the BitTunix and BingX exchanges. If you want 15% trading fee discounts for life on these exchanges, you can get them, right? With my links down below, 15% trading fee discounts for life. They are global, non-KYC. They have never been hacked before. They're very good exchanges. I've handpicked them. And again, you can get that permanent trading fee discount just with my link below. Look at the screen right now, 5,500 USDT in rewards for using that exchange on BitTunix. You can get that again with my referral link, and 4,000 on BingX. Check them out, guys. We've also got the Crypto Academy. If you want to learn how to trade, it's on sale right now. Educational course, very good value, very reasonably priced, not overpriced like all these courses that give you 3 hours of content. This is 30 hours of content, right? In different formats, writing, PowerPoints, videos, worksheets, for a reasonable price on sale right now. Check that out if you're interested. All the information's on the website, link down below. And finally, the VIP group on Telegram. If you want to trade altcoins with me on VIP, you can do so. 4 times a week, I post trading plans. They've got a 78% win rate. Check that out. Ladies and gentlemen, thank you for watching. I hope you enjoyed, and I'll catch you in the next video. Cheers.